Market has been running like no tomorrow and we are in a big squeeze mode. I'm going to break down how I traded S&P using order flow and how I caught the big squeeze. Hi everyone, my name is Numan Ashad. I'm a head trader at Blackline Trading, and in this video we are going to break down how you can catch squeezes in the market by using the order flow. So with that being said, let's have a deep dive. So there are 5 to 6 major things that we will cover in this session, starting from the bigger context, what's the picture of the market, translating that into the context of the session and the game plan. Then we will have a deep dive into the order flow and dissecting the order book to put on a trade. And at the end, we will put everything together. So with that being said, let's start with the bigger context. So when speaking about the bigger context, there are 2 to 3 major questions that every trader should ask himself or herself. So first of all, what exactly is a macro picture? Right? When we speak about the macro picture, we want to know what exactly is the theme running in the market. As you all know, Fed has been increasing rates massively. And now we are at a point where the rates are in the restrictive phase. So the question now that the market is concerned about is if we are going to remain in this restrictive phase for longer, or is the Fed going to take it even a notch higher? That's a bigger story running in the market. A second major point, as said, what has changed? What has changed in terms of the macro picture, how the economic data is going? Is the economic data supporting what the market's perception is, right? So these are some of the macro questions that you want to ask yourself. And the most important, again, how the price is behaving around the key levels. That is the most important thing, because again, the price is a reflection of the sentiment. Price is a reflection of the bigger context. So translating that into the price section, let's look at what's happening in the bigger context, right? What you guys see on the left-hand side is the price action for 1 day. What does it mean? It means that each candle here represents the price action for 1 day on S&P 500. On the right-hand side, what you guys see is a price action for the hourly. What does it mean? It means that each candle here represents the price action for 1 hour. So what's the storyline on the technicals? The storyline on the technicals is that we are in a bear market. Market has been selling off like no tomorrow. And just some days ago, we got a massive leg on the downside. Now, this is where things become very interesting. Why things become very interesting? Because this is where we get FOMC. FOMC happens, bears expectations are that we are going to dump like no tomorrow, and the Fed will basically be very hawkish, right? At this point, everyone is very bearish. Chair Powell comes and he does not really deliver on bears expectations. As the data shows, the economy still remains very strong. And Chair Powell said that we will remain data dependent. So he did not really deliver on bears expectations. And the result of that was that we started going into a squeeze mode. We got a massive short squeeze. Now, for those who do not know, a short squeeze is when shorts are obliged to get out of their positions. As to get out of their position, they have to cover, and that covering adds into buying pressure. So what we got a massive short squeeze. If I say short squeeze of 2023, that wouldn't be wrong actually, because you look at the price action, how fast the price moved on the upside. So to sum up the bigger context, Chair Powell did not deliver on bears expectations. Bears get trapped and we go into the short squeeze mode. Now let's translate that into the context of the session, right? The context of the session is that this is where we are right now. Market squeeze like no tomorrow. And this is where the Friday closed. Monday session, we are in purely consolidation mode, purely chop mode. As you guys know, whenever the market makes a big move, it likes to consolidate. It likes to breathe a little bit before making the next move, right? So this is the phase in which we are right now, that the market consolidated for one session and it did not really break the structure on the downside. Look here, it kept on holding the prices, it kept on holding the support area very, very strongly. So this is the context of the session. Squeeze mode, bigger story, translating to mid-time frame / the daytime frame. We are consolidating. The structure on the downside did not break and bulls are still holding. Now, having that in mind, let's try to look at the market from the order flow perspective. In the order flow perspective, this is a TPO chart. This is the price behavior for one day. This is the day of the squeeze. As we discussed earlier, we broke out of a massive balance. This was a Friday session, and then this was a Monday session. Monday session was complete consolidation, and Friday session we made highs around 92s, and this is where most of the volume got traded. Right. So this chart is showcasing me, is giving me insights on, number one, where the most volume got traded. Number two, where did the price spend more time? What does it showcase me? Again, that translates into what prices are being accepted in the market as fair prices and what prices are not being accepted in the market as fair prices. So when we look at this chart, these are our levels of interest, right? If you guys see here, market spent very, very little time. We got a very, very exhaustive move. And this is where the exhaustion kicked in as we kept on moving higher. So these areas become very, very strong inflection point going into the session. Again, this information is market generated information, guys. This sort of information gives you a lot of insights into what is actually happening in those candles, right? Because these candles do not really give you any information on what is happening inside them, what prices were accepted, what prices were rejected, where most of the volume got traded. I cannot see here, but market generated information gives you that information. It tells you what prices got accepted, where most of the volume got traded, right? And what are the areas of interest. So this is market profile / TPO. So having that in mind, let's translate that into the context of the session and the game plan for the day. Every single day, this is my process, starting from the bigger picture, understanding what is driving the market, what is the theme of the market, looking at the market generated information and the technical levels, which are the levels of interest for participants, and from that, driving the game plan. So looking on the session, this was my game plan for the session. Economic overview, nothing major on the data side, a lot of Fed speakers. Now, theme of the market, as we discussed in detail, market is still in consolidation mode after the big rally. Bullish squeeze structure still has not broken, still did not break on mid-time frame. So structure remains bullish squeeze, right? Having that in mind, the information that we got from the profile as well, these were my primary areas. Primary thesis, bullish squeeze, looking for dips being bought. Line in the sand is 7072 zone. Target is the squeeze high plus 4400. Squeeze highs were poor highs, which were created on the day when the market squeezed. So that becomes our first target, right? Now, anything above that is basically dependent on the intensity of the squeeze. Yes, we did have some other targets on the upside based on the previously auctioned prices. But at this point, as said, the market has been in a very, very strong rally mode, also technically on a bull flag or whatnot. And at this point, the targets are very, very straightforward, right? So anything above 4,400 depends on the intensity of the squeeze. The second case scenario that I had for the session is in case bullish structure breaks down. Right now, the primary thesis still remains the bullish thesis because this is what the picture is telling us. But of course, you never know what the markets want to do. So the second case scenario for the session was that in case the bullish structure breaks down, we get the scenario of look above and fail. In case that happens, we are going to monitor the 68 area. 68 area, very, very important area, 68, 70 area, as we discussed in the previous slide. And we want to see two things. We want to see sellers to completely take control. And secondly, we want the structure to break down very, very strongly. Right. So these were my two scenarios for the session. Let's look at how the session unfolded. Now, this is a recording of the live session. This is my platform. Let's go ahead and hit the play button and let's see what happens. Right. Just to recap, we open around 85 area, and the first thing that happens is that we start getting a bit of selling, right? Now, again, this area is not important for me. The most important area for me is this area, this line in the sand that we derived earlier. Now, we derived that line in the sand after a thorough process. We started from a bigger picture. If you guys remember, we translated that bigger picture to the mid-time frames. From mid-time frames, we went to the market-generated information, and that's how we came to the conclusion that 72 area is our line in the sand, right? So that is the most important thing. Let's see what happens in that area, right? We arrive to the 72 zone, and look at the behavior of the buyers here, right? We get a bid. Folks come in, look at the change, look at the filled orders right here, and look at the tail, so to say, a little buying tail that we made in here. A lot of activity in this zone, but not really a lot of bearish activity in this zone, with the tape confirming that folks are active in this zone, that offer is being accepted. So that is the inflection point, and that's where the entry kicks in. This is where I took my first position for a long position because, as said, our primary thesis was bullish, and I was looking forward to the break of the squeeze highs as we discussed earlier. Again, look at the tape, speed in tape, bullish tape in this line in the sand, with the line in the sand being held. So our bullish thesis becomes active. Let's speed this up a little bit and let's see what happens. This area gets held and we started moving higher. Now let's translate that into the footprint chart. Now this is exactly the same information that we saw in the previous slide, right? Now, the only difference is that this is a deeper version of the price action. Each candle is showcasing you what exactly is happening within the candle. Where is the volume sitting, where the volume is being traded, and how overall picture looks like, right? This is where, as said, our line in the sand was. This is where our entry kicks in with the stop below line in the sand, and our trade thesis becomes valid, right? Anything below our line in the sand invalidates our trade thesis, right? So this is where I took my first entry. Look at the folks who got trapped in this area, no real activity here, and look at how buyers held that area and drove those prices higher. Now, some other confirmation points you guys can see at the delta, right? Positive delta here, positive delta here, positive delta here. Nothing major on the downside. So that was one major confirmation. Second confirmation, if you look at the volume, right? Very, very strong volume as we held that area very, very nicely, and volume started being consistent moving forward. So this is where the entry kicks in, and this is where the trade kicks in, right? Now, as said, what's our objective? As we previously identified, our objective becomes the squeeze highs. Now let's move forward to what happens afterwards. This is until 43.87. This is a continuation all the way to the squeeze highs. This is how the price unfolded. Very, very strong squeeze with very, very strong delta. A lot of folks got trapped and now they're exiting their position. New buyers are coming in because they want to catch the move on the upside, and we are squeezing like no tomorrow, right? Now, this is around where I took my position off, right? Because again, my trade thesis at that point was that we are going to take out squeeze highs. Anything above squeeze highs is the cherry on the top, right? Anything above squeeze highs is dependent on the intensity of the move, if the volume is there, right? And how the overall picture is being shaped. I took out my position here. Of course, I could have left some runners, but I was comfortable taking my size here, right? Now let's look at how that unfolded in that candlestick form. Now, if you look at the candlestick form, again, this is where the entry kicks in, this is where the add kicks in, and this is where I exited my position. Now, again, if you benchmark this picture with the previous picture, this does not really showcases you what's happening inside here. This does not really give you insights in terms of what happened in these candles. But if you look at the market from the auction point of view, as we discussed in the previous slide, right? If you look at the market from the auction point of view, if you start looking deeper inside, where is the price being auctioned? What is considered as the fair price in this area, right? If you start looking at the market from that point of view, from the auction point of view, then things become relatively easier. So this is just putting it all together. These are my live entries for this trade. As discussed earlier, 72 area as the initiation of position, this area as the add, and this area 95 as the target. Now, if I have to evaluate this trade, I would say that trade was quite solid, because at the end of the day, what matters is the risk to reward, right? If this is my entry and my risk is here, this is a very, very solid risk to reward trade, right? Also, you combine that with the entire process that we discussed. You have a thesis on a trade, right? You have a thesis, you have a solid game plan, translating that thesis to the technical scenarios, and then execution. That's all it comes to. So all these three components came together very, very strongly. And this is how I traded S&P and caught the big squeeze in the market. So this is how I traded S&P and caught the big squeeze. Always start from the bigger picture, always understand the context of the session, try to determine what is the theme of the market, translate that to the market generated information, and then take your trade from there. So with that being said, thank you very much for watching this video. I hope this video provided you some value. Feel free to hit the like and subscribe button, and I will see you guys in the next video.